morning, everybody, and welcome to the Fred Report Technical Market Call for September 15th, 2011. First of all, we'll get right into it. We've got the Georgia Securities Association fall outing this week, so I'm going to be out of the office for much of this afternoon and part of tomorrow. I do want to, as I wished everybody in the midweek, wish everybody a happy expiration and sort of relax and enjoy what hopefully is going to be fall weather around the country for everybody. We're seeing some very nice weather here in Atlanta. So I guess the first thing I would say is in the midweek this week, we did suggest adding a little bit of cash to this market. It still looks on balance like we're going to have a retest of the 112 to 110 area and a new closing low. Traditionally, my indicators suggest there's an 80% chance of that. That does mean, however, that there's a 20% chance that we don't do that. And the way the market is trading, and more importantly, the fact that percent bears has moved up on this rally to the 40 area and so on, is suggesting to us that the chances of a successful retest are looking much more likely than an unsuccessful retest. And obviously an unsuccessful retest would be simply continued downtrend to 1,000 after this consolidation is over. Right now we're really not seeing that. What we're seeing is a move back down, a close in the 1080 at 1090 or 1100 area, again on increased bearishness. And then, frankly, a good shot at a rally October, November, December. What we're seeing, what we expect is basically sometime in the next couple of weeks this market should do the retest and then generate that buy signal. We've talked to a number of people. There's been the suggestion that this could be a short covering rally coming, and some of the short data that some of my associates do suggest that that could very well be the case. But even if it's a short covering rally, it still could be quite nice and quite playable for us. So we should be ready to take advantage of that. Right now, I don't think this market will go much beyond, say, 122.50 to 123 on the rally that we're in. So we're close to the end of it. If you guys are playing very short-term stuff, and most of our clients are not, but if you are, it's probably worth starting to take some of that stuff off from the lows on Monday. But my guess is we're going to be up today and then quite possibly down tomorrow, down for the next 2 weeks, and we use that opportunity to add some stocks, etc., and we have a fairly decent rally at the end of the year. One of the reasons I think that is the bond market, TLT. Looking at TLT here, you know, it's still hanging up in this 112 to 114 area. Our accumulation models have improved a little bit, but not huge. And the Fred's price oscillator on the weekly is suggesting, frankly, that a decline in these bonds is imminent. So I would be devising some sort of a stop loss or exit strategy if you're very long these. And I know we have been wrong on these thus far in terms of them getting up here. We thought this move would stop at 100, and here we are at 112. But I do think this can get back to 98 to 100 without any real trouble. And I don't want people that have been smart enough to stay in these to lose that money back if they start to fall off. And I do think if the bond market falls off here, that's one of the things that's going to suggest a stock market rally. So just be aware of some sort of defense. Much below 108 on these things, there is a little bit of a gap on TLT, and we'll write about this, I think, in the weekly. If you see this thing much below 108, the chances of 100 go way, way up. So a little bit of caution here. Let's talk about gold for a second. Gold looks like it has peaked in that 1890 to 1900 area that was our target. We are sticking with our target of our 12-month target, which will now be an 11th-month target of 210 or 2100 an ounce. But some consolidation in the fall in these commodities is generally normal. And if we can see some consolidation into October, November, say a range of 160 to 180 on GLD, that will prime us for the next move up in commodities. and will, I think, be very, very healthy for the markets overall. And that's what we're looking at as happening here, some consolidation, followed by continued up move in this market. We've had a number of questions on the dollar. The dollar has rallied for us. We've hit our first target of 135 on the euro or 22 on UUP. We think that UUP can go through 22 and make it to 24, but if you're a currency hedger or such, we would start to probably put hedges on now. The fact that this move has taken longer than we anticipated suggests that it could be quicker and with less magnitude than we have expected, and I don't want to miss anything on this move because this has been a nice move in the dollar. It's been about a 5% move in the dollar fairly quick. In other words, if we don't go much above 22, this is a great place to start to hedge.